Sun International released its full-year results today, reporting revenue growth of 7%. Adjusted headline earnings from continuing operations decreased from 485 million rand to 472 million. That's 3% below the prior year, while adjusted headline earnings per share rose 4%. Let's now cross to Arabile Gumede at the JSE. He's with Sun International CEO Anthony Leeming. Arabile, over to you.
Thank you so much, Nzinga. Well, yeah, you've pointed out the numbers there, so let's get straight into it now. I've got the Chief Executive, Anthony Leeming. Thank you so much for the time, sir, for joining us as well here on SABC News. It has been a tough time. The economy itself isn't necessarily going that well, but you remain resilient. You've managed to eke out a good set of earnings as well. Let's talk about the year and how it's been.
Yeah, look, it's a tough environment at the moment for any consumer-facing company, and particularly one like ours that depends on consumer disposable income. I mean, if people haven't got money, they're not going to gamble. So pretty important that the economy starts growing a bit more and we get things right. But I think the government's on it, and hopefully it'll get better.
Yeah. How do you manage then to ensure that you're at the right position and you're rightly placed to take advantage of what might turn out to be a growing economy if things do turn around? We hope that we are at the bottom of this curve, despite things like Eskom as well. But if we do turn, how do you make sure that you're, primely placed?
Look, you've got to continue to look after the consumer. I mean, we have guests every day in our properties, thousands around the country, and looking after them, making sure they always choose Sun International and keep coming back is the real key priority. If they keep coming back and keep choosing us, guaranteed when the economy turns, they've got a bit more money, they'll have a bit better time, and so will we.
If you continue to take the operations then and look at the basket of operations you currently have, is there a look to either be leaner or even expand, considering the fact that the economy is where it is? But as I said, taking advantage of the future might also be a priority.
Look, we've had a huge focus in the past year on really trying to be efficient and effective. So a bit leaner in a sense, but I think deliver more. So deliver this more with less cost, and I think that's the key focus. So we've insourced a number of services. We were outsourcing previously. We do our own internal design now. Really have lifted the standard and looking a lot better. Bought shared services, which is the already accounting and finance function centralized. And that helps a lot to sort of be really efficient and lean, and operations can look after the guest.
Yeah. Okay. So let's talk about then you managing to reduce your debt levels by quite a significant amount. How much further are you planning to take that, and how much more are you willing to perhaps decrease that, perhaps over the next year and maybe into the long term?
Yeah. Well, the debt pressure was really in South Africa, where we had extensive debt following quite a lot of expansion. We went to our shareholders initially, raised 1.6 billion from shareholders, and I think operations generated about 600 to reduce our debt in South Africa from 11.4 to 9.2 billion. It's still at a 3 times debt to EBITDA or debt to cash flow level, which is, I think in South African terms, on the higher side. So we'd like to bring it down probably about another sort of 2-3 million.
So still a concern
2-3 billion, I should say.
Yeah.
Yeah.
Over how long?
Probably 18 months to 2 years. Yeah.
Okay.
About 2 billion down.
In doing that, will that mean that certain parts of your business begin to take a hit because you're focusing more on that? How do you make sure you sort of put your arms in all of these?
Again, we've spent a significant amount of time on maintenance, understanding our plant, understanding where the issues are, and that was really done this past year. So getting that right and moving that forward so that we spend the money in the right areas. We are refurbing the Cascades, we're refurbing the Palace, we did the Sabaya Privé. So our properties are kept at a high standard, and we are already looking after our assets. So we're focused to look after what you have. It lasts longer, it saves you money in the long term, and that's the key focus.
Okay. I've been to the carousel. I absolutely love it. But sadly, it is one of your loss-making operations. That and Boardwalk, if I'm not mistaken. How do you plan to deal with those? What is the plan to do there? Refurbish, change, sell off?
Yeah, the carousel, when you go in there, it's a bit of a relic from the past, but it's still beautiful. It really looks, the casino is one of the most beautiful in the country. But unfortunately, the customers have moved to Times Square, our new property, so a lot of the damage caused by ourselves. And it's just not in the right area where the money's really a lot of money availability. So we plan to reduce it and make a more local market casino, make it a lot smaller and focus on the local customer. And that should bring it back to profitability over the next few years. So that's downscaling the number of positions, slot positions we have from 700 to 300. Taking out tables and electronic tables and lowering the staff complement. Fortunately, we've avoided most retrenchments and been able to move a lot of staff to other properties. There might be a small impact, but it won't be significant, unfortunately.
What happens to Sun Dreams then? How's that going? I mean, you've acquired quite a large amount of it as well during the period. How's that supposed to help your business now?
Look, LATAM has actually shown a bit more resilience. I think at the half year we were quite subdued, the economy there. The last 6 months have been a lot better. Monticello's recovered very well. Monticello's our original property. We've taken some action on the loss-making, which was Panama and Colombia, and those will be discontinued in the future. So really, it's a growing economy, doing well, looking after the guest, and it's actually taking some market share. We acquired 2 properties, one in Mendoza, Argentina, and in Peru we also acquired a company called Thunderbird. So those are contributing positively now to EBITDA.
Mr. Leeming, thank you so much for the time. Appreciate it. All the best with the year ahead as well, and we'll hopefully catch up again and see how the market fares and you've done thus far in the next financial year.
Thank you very much. Thanks.
Thank you so much for that. Well, Nzinga, that is the CEO there, Chief Executive of Sun International, Mr. Anthony Leeming. Of course, difficult time. Consumers continue to struggle, but perhaps a reshaping, a reshifting, and a way to move forward for the company, especially in that reduction of debt. So we'll continue to see how things fare. We'll obviously analyze the market and just how the market fared with regards to Sun International and how they're seeing it in just a bit as well with Gary Boysons.